Hello traders, it's Samurai Trader here. Welcome to session 130, how to day trade any market for $1,000 a day challenge. In today's session you'll get to see two recorded trades where I was trading the 3-tick ES, and I'll explain more about that in a moment. And of course what I cover in these sessions you can apply to futures, forex, or stocks, basically any market there is. $1,000 a day not enough, just simply increase your position size. As always, I do need to pull up the disclaimer. There is a risk in trading. Don't trade with money that you can't afford to lose. Great thing about trading today, you can stay on a simulator as long as you like, so master the setups on the simulator first. Very quick advertisement: if you haven't already, you can download my ebooks. I've got a training manual down below. I've got the truth about day trading. You can also download my step-by-step day trading blueprint, where I talk about how I set my daily targets, and there's also a training video that goes with that. So down below you can get hold of this as well. Make sure you subscribe to my channel so you can be kept up to date with any new videos. Better still, why don't you become a member for $297? And this is a very quick advertisement. For $297 you get all of my indicators. There's over 15 plus trading strategies, 200 hours of online training videos. There's what is it? It's a gold mine, as my members would basically describe it. There are literally dozens of training modules, but let me just tell you, the great thing is you don't have to learn all of my setups. You only need one or two of the setups, which I'll explain as we're looking at the markets today. And I'm just watching the markets go crazy on the euro, and we'll talk about that perhaps in a moment. And I also have a bonus where you can attend 1 month of my live coaching sessions. So normally that's $197 a month, so included in your lifetime access to the members area, all product upgrades. You can also attend 8 live sessions. Now these are held every Tuesday and Wednesday, 6 p.m. to 8 p.m. Eastern Standard Time. They are recorded if you can't attend the live session. So, and after month 1, I know you want to continue. You've just got to drop me an email if you wish to continue, and just simply fill out an online form, but that's not an automatic sign up, by the way. So lifetime access to the members area. All right, let's now get into this. Traders, I consider myself a scalper. Get in, get out, get paid. And most scalping is with the trend. Now I do have a number of reversal strategies that work really well as well. I've got mean reversion, I call it the T3. I've got a 2D, which is a fantastic setup, but generally speaking, scalping with the trend works really well, as you're about to see. Now today we've got the FOMC announcement. So today was Monday the 5th of May 2025, and I'm actually recording this effectively at 2 a.m. Central Standard Time the next morning, which is in the evening, 5 p.m. in my part of the world. So the setups, or the two trades that I took, were into what I call the New York close. Now today was unusual because we had very low volume, and normally you'll see on the ES we have around 1.5 million contracts traded. Today was very low, and the reason I bring that up, I was only trading the 3-2, it's called, Renko chart today, where normally in the New York afternoon you'd be trading a 4-2, maybe even a 5-3, and I won't get into why we choose these. Well, one of the reasons is the speed of the market. The market has to be tradable. Now you can apply these strategies that I'm about to show you to any time frame, any market, and any type of chart. So when we get to the charts in a moment, I'll actually show you some tick charts as well, what they look like on the tick charts. But the advantage of Renko, they really smooth out price action. Now I'm very much about POQ, power of quitting, like to get in, get out, get paid. I have a target. I won't get into today Why I have a target there of 400, but depends on the time frame that I'm trading. I base my target on that. Now you may choose to keep trading, but for me, I like to just wrap my trading up, get in, and you'll also see here get in, get out, 5 contracts, and the number of contracts I trade depends on the capital requirements on per contract. That is, capital will change, will vary. The higher the time frame, generally the larger the stop loss. I like to have my stop loss one tick above, and we'll go to the charts, by the way, very soon and have a look at it on the charts, because there's some really good stuff I want to show you, particularly on measured moves today. So we had a nice setup there, then we had a setup here, see here, and you'll see this. I've recorded this as I was actually trading here, and I'm targeting pivots. Pivots are very, very powerful. Now if I'm trading a 2-tick entry chart, I'm after 250 a day. Here I was trading what we call a 3-2. It's 400 a day, so it will vary. Now I just want to mention this: capital preservation and your account size is absolutely critical. And I know most traders don't want to hear this, but traders, this is critical. You hear this. So let's just say here, and actually let's just talk about the higher time frames for now. That is, if you're going to trade during the New York hours. Now as I mentioned, it was particularly slow here, so you could get away with a smaller account size. But what if you've got an account size of under $1,000? Well, one of the options, of course, you can go and trade with a prop firm. Tons of opportunities there. We've got quite a number of members now are trading with someone else's money, but you can start on the micros. Now we never risk more than 2% per trade. If you do, well, you are going to blow your account unless you're already a highly skilled trader. And I know most traders don't want to hear it, but it's a reality. Now if you're going to trade using say the 3-2, you need an account size of around 8,000 on a big contract, or 800. Now I know your broker says you only need $500 to $1,000 for the day trading margins. However, what if your risk is 162.50? That is, if you've got a 13-tick stop loss, that's $160 odd. So you need to take that in account. But let me show you how doing this correctly, how powerful this is. This is about how you really trade the market. If you don't have 8,000, you're going to start on a micro. Even if you've got say 4,000, you might start trading four micros. But here you're going for $40 a day. So a micro contract is 10% of the value of a big contract. Here within 12 weeks, you've now got the potential of, you've built your account to 9,000. Now you can go and start trading a big contract. If you're new to my channel, you only start trading an additional contract when each time you get an additional 800 in your account. We're using the market's money. And so at the end of each week, $40 a day, you're building your account. Now then in 12 weeks time, we're now ready to roll over and start trading the big contract. With the big contract, you need around $8,000. And even if you've got 8,000, 10,000, 20,000, start on a micro, cut your teeth there, learn my setups, and then go to the big contract. Here within 10 weeks, you've got the potential there of a $12,000 a week income basically, and your account's now at 58 and you're earning 400 a day. Now that's based upon, and I'll show you what this means, because how do you achieve 400 a day? That's 3 6-step trades a day, and I'll show you this. That's 12 ticks each trade, and I'll show you this when we get to the charts. Here's the reality. You start off with a micro account, go for $40 a day, 32 net ticks a day, and by the way, this is during the New York hours, or a faster moving market. Okay, during the slower market you can be trading a 2-tick, but anyway, In 12 weeks your account size is now potentially over 9,000. You can start trading the big contract. It's taking you 22 weeks to basically getting to this sort of level of income. Now if you then allow say 8 weeks of training on the simulator before going live, where will you be otherwise within 30 weeks? This is the true potential of learning how to day trade the right way from day one, and I'm going to be showing you on the charts in a moment. Now let's go to the recording, which just goes over a couple of minutes because that's all it took, and then we'll go to the charts because I want to show you a couple of really nifty things that you can run with. But first of all, these are some of the key levels that I'm interested in. Now you don't have to take notice of all of these, and nearly all of these we have indicators that plot these automatically. By the way, I don't sell my indicators, they're included in your membership. And if you've got a trading platform that I may not have indicators for, I give you the settings so you can set almost on any trading platform up every one of almost any trading platform you can set up what I do and how I trade, because I give you the setting as well. English then was terrible, sorry about my grammar then. So let's first of all have a look at the recording, and I'm going to walk you through these setups. Now first of all, and we'll go to the chart over here, I want to talk about these levels. Why didn't I trade here? Okay, why didn't I take these trades? This is important you understand and know why. Okay, and there was a great potential trade there, but as you're about to see, I took this one here. Now there's some other, I want to show you some measured moves and a little tool I have, some really unique things I just want to point out to you. But if you're a brand new trader, you don't want to get caught up with like measured moves and things initially. You just want to really learn the core setups. Keep it super simple. So I don't have a audio here, so I'll run you through exactly what I'm doing. Now first of all, see my circle down there, so my pointer. So what I'm showing you down there and those blue hashes down there, that is a pivot, and I'm targeting the pivot. And just there on the right, I'm looking at a higher time frame. I was looking at what I call my anchor chart. So I'm going down here. I'm not sure if you can see my actual my one that I'm doing in real time right now. I actually should have gone and squeezed another 2 ticks out of this, because we've got a very good chance once I break below these swings over here of getting down to the pivot. Now you may have noticed just there I went to break even and locked in a couple of a couple of ticks. Let me get this right, my goodness. And no, I haven't been having a glass of wine, but I've locked in a couple of, and there, bang, it hit my target there straight away. And I should have said right from the outset, traders, I don't run these sessions to a script. All right, so now I've hit the pivot right there, and I really should have gone for an extra 2 ticks, but it was a really nice trade. Now I'm eyeing off the pivot down below, and I'm actually getting ready for what I call a slingshot trade. Now I'm not filled on this. Okay, so I'm still not filled. I canceled the order. I was thinking that actually there of a T3. So if you remember, I was actually thinking of a T3 entry just there. So a T3 is what we call a reversion to the mean. Now here I've now got a slingshot. Now little complication with this slingshot, we do have a pivot straight below. Now what will quite often happen is when we hit a pivot, we bounce off them like over here to the left. Now one of the things with this, we had some angulation, we've broken out of this range, and when you've been in a period of consolidation like over there on the left, quite often then you'll get a really good powerful move. But there's also something else here. See this here, this is my long-term stochastic. See over here how it's in, I call that no man's land. And that's why I wasn't really interested in these potential trades just here, and thank goodness I only went down a couple of ticks and we almost certainly would have been stopped. Now back onto this one, see my target is down just above the pivot. This is what I call a pivot magnet trade. Now just there I'm trailing down and now I'm filled and out of that trade. And the reason I was trailing, sometimes you'll bounce before you hit the pivot. We don't always hit the pivot, but a pretty high probability that I was going to hit that pivot right there. So let me now go to the charts and give you some tips and ideas for your own trading. Now this is actually back in the afternoon, so this is actually 1 p.m. Central Standard Time. So what I always look at, and if we just go back here, notice the support resistance, see that very dark black line, that is a major EMA on a higher time frame. And I just want to show you a little tool I've got here, which I'll go like this here, and look at that there, that's a 50%, sorry, that is an exact 38.2% retracement just there. Now you don't have to apply fib retracements to these setups. However, if you have a Fibonacci retracement and a bounce, very simple to learn the way I do it, it adds to the probability of the trade working out. Now what I'm looking at, and there's many ways of doing this, but I look at the most recent low. I've now got a new higher high. I'll now pull it back to the most recent low again, and you know when to put that there, because as soon as you have a retracement, your first candle that closes, and you can see there I'm bouncing off a pivot and off a major EMA, that tells me I've got a great potential setup just there. So that would have been a great one, and that one. Now I should just point out, this is what we call a 3-2 Renko. Each step is 2 ticks or $25. So if you look at that, and you may not think that's much of a move, but remember we only need 3 6-step trades a day. Now what I mean by steps, 1 2 3 4 5 6, these are what I call steps. If we took this trade, we would have been in up here, 1 2 3 4 5 6, we're out. And just notice the cloud and notice the turning point arrows you've got there. See those arrows? There are some other rules to it, but basically that's giving me a guide, the super scalper and the arrows when to enter. Now I wanted to point this out. So now we're on the way down. Look at my long-term stochastic is down. So that's these are all short trades here, and you can see the slingshots on the way down. Now as we come down, I'm now pulling back. I'm not interested in taking any trades just here. Why? I'm at a major support resistance level on a higher time frame. Now I'm pulling back to here. Now I'm getting interested. So what I do, I simply take my tool, go from there to there, and once again this is optional, and look at that there, we come right back to 50% exactly. Now what that tells me, I've got a very high probability bounce, because there are so many traders trading the ES that will follow and trade fib levels. So there I've got a bounce, and once again 1 2 3 4 5 6 7, you know, you've got a good 10 steps there if you wanted to stay there. Now 10 steps on this market, by the way, is $125. If you wanted to, oh no, that's sorry, it's that's 250. This is, sorry, I was thinking that's ticks, my apologies. So 10 ticks is $125. 10 steps is 20 ticks. Let me get that right. So now what do we do? So when I'm looking for a swing, I've got now another one right here. So I'd simply go from there to there to here. Now this is a really interesting one. Many of you have probably heard of Larry Pesavento. Now Larry Pesavento, if you haven't heard of him, you should Google him. Very famous trader, huge on fib numbers. He loves for 70.7% retracement. Lots of traders will say, look, once you get past the 61%, forget it, don't trade them. Nothing could be further from the truth, particularly if you're in a trending market. So here, not only do I have, it's called a pivot bounce, I'm bouncing off the major EMA and the 70.7. now we break out our first target. The second target is 23%, then 61, and we bounce off it right to the tick. See that? First target, second target, third target. Now I prefer as a scalper to have a fixed target, but here that just cements that, hey, I really want to take that trade. Now let's move along, because this is where then I decided to set this out. And this is, and I didn't take these trades, by the way, and I wasn't in those, but I wanted to point the swing indicator out to you. I get a pullback and I've got a great potential trade just here, but when we've got a very deep pullback, and see, I'm bouncing off the higher time frame, that's the anchor chart one, a major EMA. I was thinking about it, but I like to wait for a confirmation, and this is what I call a T10 or a money on the floor trade. So this is the one I first took. Now what I do is I want to look down. Down here I can now see I've got a pivot. Now when we're looking at taking a trade, you may remember on that slide, one of the I showed you earlier, one of the considerations, and let me just go back to it, I think this is important, is just here. Oops, not that one, this one here. Where's our intraday swing highs and lows? Because you'll find supported your current day's high and low and your swing highs and lows, intraday swings like these. So see how we bounced off that one, we come down and we bounced off that one. There was actually another reason we also bounced, which I won't get into right now, but here we bounced. So as we come down, you may remember I wanted to quickly get to break even, and that's called a Renko tail. There's a little tail, hopefully you can see that there. Now Renko tails are also known as trend continuation signals, but anyway, we finally broke through that. And when I say I go to break even means my entry price plus a couple of ticks usually, and now I punch through. As I said, I should have really woulda coulda shoulda increased my target by 2 ticks. Now this is called a pivot bounce. I've broken out of this trading range now, so that was sort of over 20-30 minutes, this range. The other thing to consider here is I want you to look at the time. That's at 14:44, which is 2:44 Central Standard Time. Once we get to 3 p.m. that's it for me. Okay, we tend to find the market can go crazy after 3 or at 3. Sometimes it's okay, but it can go crazy. Now there's also another very important point, particularly for newer traders, if you don't know this. With most brokers, they have what we call the day trading margins cut off at 3:45 Central Standard Time to 5 p.m. So if you don't close, or unless you've got a sufficient enough margin in your account, what they call the overnight margin, they will close any open positions at 3:45 and charge you for that. Okay, so you want to make sure that by really 3:30 you're definitely out of any trades. Now I like to finish my trading by 3 p.m. and that's 6 a.m. my timing, my part of the world, by the way, because it tends to get very fast. Now I'm in this slingshot right here. Now you'll see me in my videos, I do this all the time. I scroll down like this, and what I'm looking for is the major support resistance areas. Now we don't always hit it, but we've got a damn good probability of going down and hitting it. Now particularly if you have no divergence. If you've got divergence, some of your best trades, divergence trades, will come off pivot bounces, what we call pivot bounces. Okay, so when you come down and you bounce on a bit, like look at this just here. Okay, so see how I come down, we hit the pivot, and see that there now I've got divergence. So if you've got divergence and you've got a trade entry at a pivot, you've got a much higher probability of being stopped out of that trade. Okay, now then we've got let's just see, and I haven't applied the measure move here, but let me just do this: major high, major low, new swing high, and surprise surprise. It's an exact 50% retracement. Now if we then go down here, we hit our, see that level just there, that's the first target's been hit. There's your second, and where do we hit the third? Maybe we don't. Eventually we go down, and by the way, I would not, no way would I hold on that long, and here's why. We could bounce at any time, where on the way down you had another entry there, you had an entry here, had an entry here, you had an entry just here, actually yeah, you had one just there, and you missed the pivot there by 2 ticks. Now here's a trade where you had some beautiful trades on the way down there. You had 1, 2. If you had stayed with that one, possibly you would have been stopped out of that, but then you had a re-entry there and you had a re-entry there. And you don't want to be taking these trades anyway, because it's a couple of minutes before the hour. Okay, 3 p.m. Here was your next trade. Now why would you take this? Look at the trend direction of the major EMAs. Now what I wanted to show you was the difference between that and this. Now this is currently where the market is right now. Now this is a tick chart, and this is an 89 tick chart. An 89 tick, which of course is a Fibonacci number, works really well during the Globex session. You can even drop it down to a 55 tick if you like trading tick chart, or if you want to smooth the chart out, you can do this and you can go to a 2 tick Renko. Now see that there, how smooth that is. Now I just want to show you, you had up there at a beautiful double top, see the arrows. Now the arrows are the turning point. So I've got 2 turning point indicators. The white paint bar is called the super scalper. That won't put you in until the close of a 3rd candle, so you're in effectively on the 4th candle. Works just a great, very powerful indicator with the trend. The turning point allows you to stay with a trade. See that there? See the turning point line? You can stay with that and get out there. Means you're going to be in this case, on the close of a 2nd, on the close of a 3rd, the close of the 2nd, the close of the 3rd, the close of the 3rd. Okay, there's nothing magical with this, and it doesn't replot, and it's based on square root numbers. And see, you've got an entry here, you've got an entry there, you've got an entry there, you've got an entry there, you've got an entry there. Now with this, you're trading with the trend, and I recommend to all traders, stay away from counter trend trading until you're already consistently profitable. See all of these, that was with trend, with trend, with trend, with trend. All of those were winners. Now you can say, oh, you're cherry picking. Well, no, I've just scrolled back and just showed you just where we are. Now how do we follow the trend? Okay. Well, there you can see I've got the cloud, and see the cyan moving average. Okay, so we look at that. Now I can't help myself, but we've got to put the just there to there to there. Now that pullback there was a bit beyond 50%. We hit our first target, then well, there's the first, you hit your second, and up there, bang, you've hit your third. Okay, if you want it now, but remember, I would have been out there, re-entered. Okay, I don't want to go and try to stay and pick up a long move, a really large move. I find it's better you can re-enter the trade. And last of all, look, let's just do one more. We'll take that one to this one, and look at that there. Okay, first target, second target's there, and down there we've hit our third target. So there's many ways of drawing this. So traders, the ES is a fantastic market to trade. It can be trickier, uh, and at times we've had incredible volatility recently because of the Trump tariffs, and it can be very, very quiet. If it's quiet, you know what we'll do? We'll drop down to even the one tick, which works an absolute treat. And just to show you this time of day, by the way, and look, before I go back to this, I won't keep going back. Come and join me. You can join using the link below. Okay, come in my sessions and I'll teach you how to do this. But what I wanted to show you was what's happening here on the 6E. Now the 6E, which is the euro dollar this time of day, so the euro dollar just trends beautifully. Each one of these steps here, traders, is $6.25. So the advantage of the euro dollar this time of day, and it really, you can trade it 23 hours a day. It is a little bit quiet from the time the Globex session reopens up till 8 p.m. Eastern, but you get these great trends, and you can trade both the one tick here. Believe it or not, you look at that there, you think, really? Well, the advantage of a one tick, your stop is really small, and 80% of the time it's tradable. 99% of the time this is tradable. Okay, and all of these, look at your turning point. Now what about that one there? Did we just have a trade there, by the way? And this here, by the way, is called a T3, and when you have a T3, I'm just sort of digressing here. I know traders are usually really interested in this stuff. Do I have it? Damn, I don't have. Let me just quickly do this just to show you this, traders. Let me just quickly change this and just do this just here, because there's a very simple rule. Yep, there it is there, no trade. You did not have a trade there. Look over at your anchor chart 1. See the candles? That's telling me longs only. Here, look at that there. See, my turning point line is saying shorts only. Now I can take this one. Okay, I've got a lower low, and this is actually what you call a measured move, and a beautiful setup to boot there. But this is another great market. But anyway, that's another story for another time. I trade it virtually every day as well. That and the yen. Okay, so look at this here on the yen, 625 a tick as well. Fantastic volume each and every day. All right, traders, I'm over my time. Come and join me. Let me train you how to day trade or help improve your current results. Thanks, traders.